And we are officially live for this webinar. Let's give people an extra minutes for them to join. Thank you for everyone that is already here. We're out here with Ty out of New Jersey. As we were saying, weather is not ideal, but the moment is great. And Ty's from New Jersey, so he...
Yeah, I'm used to it. You don't know what season it is from time to time in Jersey, you know? One day it feels like winter, the next day it feels like summer.
It's a roller coaster. It's always good.
Yeah, well, we for sure get over seasons. You just don't know when it is.
We're in the Eyelit's office, which is located in the north part of New Jersey, south of New York City. And great environment, great space.
Yeah.
Met the amazing team this morning, which was really nice too.
Yeah, for sure. But we're more central.
More central New Jersey?
Yeah, central. Monmouth County.
Monmouth County.
Monmouth County we're located in. Being a Jersey boy, you try to identify exactly where you're from.
Absolutely.
You know, because they'll tell you if they're from North Jersey. You're not North Jersey. You're from South Jersey. No, you're not South Jersey.
All right. 101, I think we're good to start. I hope you guys are well seated. Thank you so much for joining. We are live. And we're here to have a discussion with Ty. We're sharing coffee. This is a webinar to essentially discuss innovation incentives for the software industries. On the slide, you can read this. But we wanted to share our experience working together and essentially have a discussion about what you're probably missing it out on, or what you should look into, or why you should do it. Right, Ty?
For sure, for sure.
So first slide will be about, presenting our host. So Ty, I'll let you introduce yourself.
Okay. My name is Ty Henderson. I am a senior accountant and office manager for Eyelit Technologies. I've been with Eyelit and its acquired company for the better part of over 13 years now. As far as my experience in accounting, it spans a plethora of different industries. For example, healthcare, construction, communication, transport, logistics, and now technology, which I have a nice tenure in currently working with Eyelit.
Thank you.
Thank you.
My name is Teïva, so we will be your host today on this webinar. I work at Leyton, started as a analyst consultant, now am the software lead of the company on the US side. I've been doing R&D studies for the past 4 years. Work with people like Ty, for example, for the past 3 years, helping them identify costs that can be, recuperated or through innovation costs. So this is our experience together that we want to share with you, and we'll give you every information you should know if you have a software company or if you work already in R&D. Please sit and enjoy the discussion. This discussion, you have the agenda right here. So as I just mentioned, we will talk about R&D. We will talk about every innovation incentive that are available to you, as well as other services that you probably could benefit, that you probably didn't think about, for whatever reason. So the first one will be sharing about, the incentives themselves. Then targeting more, this partnership that we had with the Eyelit and Octessa, showcasing this case study and the testimonial about how was the experience, what did they enjoy, how did they benefit from those services, right?
Mm-hmm, for sure.
And the key takeaways, what you should remember at the very almost end of this webinar, and then the goal will be to answer any question you might have. I'm glad that we have people from Jacksonville, Tampa. Hi everyone. It's good to be here with you. We will start with a quick presentation about Leyton, because if you don't know what Leyton is, we are a global tax consulting firm. We specialize in innovation incentives, non-dilutive funding. We're the world leader in actually the R&D credits in the world. As I just mentioned, we have been in business since 1997, so over 25 years, almost 28 actually. We have 3,000 employees around the world. We serve more than 50,000 clients. We are headquartered in the US in Boston, have an office in San Francisco, and we recently opened our new office in Houston. So shout out to the people in Houston. We also wanted to mention that Andrew is watching this webinar. He's saying hi. Andrew is the technical consultant that was working with Ty and I on their claim. So we'll explain a bit like his role and what was the value that, for example, Andrew brought to the study. If you want, and Ty will share a bit about his his experience.
Well, hello, Andrew, first and foremost, just to get that in.
So the R&D credits, I guess before diving into like what's available, I'd like to ask you a question, Ty.
Yes, sir.
At what point, did you realize that your R&D effort could result into either cash or a benefit at all, How did that happen?
Well, I want to say it was late in 2020. Ashok came to me, who's our former CEO. He came to me and he said, Ty, I heard about this R&D credit thing. You should explore it and see if we could benefit from it. And so I spoke with our tax consultant at the time, and he said, yeah, there are alternatives out there for you. And I know of this company called Leyton. You should give them a call. So he handed over the number, and we reached out, and that's where the history began. Once we met with Andrew and the consultant at that time, it was just a pure fit for us, and that's when our history began as comrades.
We'll talk more about this, but thank you for sharing. So, for example, we won't give too much information because we have an NDA in place, and we're not going to sell the R&D that Ty did for this company.
For sure.
But what we can share is that, for example, Ty was part of Optessa and Eyelit, now Eyelit, and it was an established company already, so they could take advantage of that credit on the income tax credit. The way that we went about this is that we looked back 3 years, we identify R&D costs. Because they were profitable, they could get a refund based on those R&D activities that they had. And the beauty of the credit is that even if you are not profitable and you had an R&D, you could carry this credit forward for up to 20 years, which honestly, if you plan on being profitable this year, even if you had net operating losses in the past, you'll only be able to offset 80% with those. So the R&D credit will help you to offset your full income tax liability, of course, depending on the amount of R&D that you did, but there's no limit for the credit as far as size. It's about 10% of the spending, so you really should take advantage of this. And the payroll credit is more available for startups. Usually pre-revenue, you don't have much income. You have a lot of payroll, so you have employees, and you need to pay payroll taxes. So if you make under 5 million of revenue and you incurred your first dollar within the past 5 years, then you are eligible to get this credit and offset your payroll taxes, because you're not going to be able to offset your income tax since you don't have a profit. So you can carry this credit for without any limits, which is very nice. It's also a dollar for dollar offset, and you can offset up to $500,000 in payroll taxes, which means that you probably had $5 million in R&D costs that we qualified. So it means that you're in pretty good space to continue growing. But the question number 3 was like, when do you transition really? And it really comes down to your position. If you start to be profitable, then we could do a mix of income tax and payroll taxes to allow you to free up this payroll cash, this payroll money that you were supposed to put in there, but like allocated to the product development or anything else, which we will dive later on as well. But this was just some quick R&D overview, and it benefits on different level for established and startup companies. So please reach out if you have any questions. Do not hesitate to add any questions on the Q&A section of our webinar. I will move to the next slide and talk about the 4-part test. So shout out to Andrew who's watching. He's usually the person talking about this on calls. And what was your first impression? Like talking about the 4-part test. We do this every year, right?
For sure. Every year we go through a scoping phase where we actually have to make sure that we are adhering to the 4-part test. Andrew and you have been extremely helpful. There's just been a wealth of knowledge that we've been able to garner and acquire through consulting with you guys when it comes to the 4-part test, making sure that our projects are applicable in every way and that we can, get the best benefit out of, the case studies that we do, whether it's Section 41 or Section 174.
Sure.
So with that being said, the 4-part test is something that I actually enjoy doing. I get to learn a little bit more about the technical side every year, being a finance guy. As I stated, it is definitely an experience that I think most companies should be able to have with you guys.
And I agree, because you study accounting, you study finance, you know everything about accounting or finance, or at least most of what you should know. You don't know about the actual software development, or you don't understand about, the actual coding, what it was done, why you would fit the 4-part tests, was the IP retained, that you probably know, but there are so many like inside and out that people should be aware of to be able to maximize an R&D credit, and which is why you have like Andrew like sitting with us, which is why it's not only me being a more finance or tax focused person. We bring like this knowledge, this expertise on each claim that allows us, to maximize this claim. Of course, being in line with the IRS guidelines, and which is why we also protect we have audit defense, unlimited audit defense now, so, to substantiate, like answer any question the IRS might have, because we are confident that we know what we're doing, and we essentially are able to defend whatever we are delivering. So these are the 4-part tests. If you have more questions, you can answer them, but essentially just to go quickly over them. We want to make sure you're doing something new, you're creating software, you're integrating an AI into your business. Sorry, you are integrating APIs. It depends, like there are so many back-end work that can qualify within the software industry that you probably don't think always about. And we can essentially identify all the technical challenges we face every year. I won't go too deep into it, but the software industry should get an R&D credit if it's not the case. And they also should get a specialized firm working on this, because an accountant or a payroll company most likely do not know what software development exactly is, and they won't be able to maximize your thing. I'm talking by experience. I don't want to oversay, but this is my opinion, and I'll give it. We're going to talk about the qualified research expenditures, which we also go through every year with TeIva. You want to share a bit like how we go about this usually?
Well, normally with our QREs, the qualified research expenditures, that's primarily like our second call, right?
Yeah, that's the second one.
That's our second call, where we go over the expenses, the allowable expenses, and things of that sort. I have, because I'm so hands-on, I have a lot more experience just working with Leyton. They've given me so much knowledge, so I'm able to streamline the process.
Yeah.
And Leyton has actually helped me to streamline the process because they do a lot of the footwork as well. However, with the QREs, it is a process that I am familiar with. We go through it. We make sure that everything it jives per se, right? Mm-hmm. And that our technical report, which is a deliverable, matches all of the figures and that we're able to claim and try to maximize the benefit of.
Very true. And every year we spend a few hours with TeIva sitting, having discussions on what employee, how employee were involved. We want to make sure it's in line, it's realistic. So we can include like on the 3-level activity, someone working on direct performance, supervision, or support. We can include for people in the software space, cloud computing costs. So costs like Azure, AWS, Google Clouds. We're not looking at the data hosting, but everything really back-end related is a cost that drives the credit up. We should not turn a blind eye on, and we can also include contractors if they get paid the right way, which is why we have a look at your contracts. We can also talk about it with our attorneys and make sure everything is in line to be able to maximize this credit and make sure you're not leaving any dollar on the table, which we do every year. And it's been working out pretty well since then. And just a quick information for you to know, the forms 67, 65, which we prepare and we draft for your CPA to file, are changing. They already changed in 2024, and there will be even more scrutiny on the 2025 return, which is happening in a few months. March, the deadline is coming up not too far. So I wanted to mention that now you need to explain to the IRS what business component people are focusing on. There's a lot more scrutiny, and unless you have a discussion with your technical team, or your payroll company has a discussion, or your CPA has a discussion with your technical team, this form will not be able to be done correctly, which is why, again, hiring a third party that knows what they're focusing on, at least for the R&D credit, is very important, especially going forward. However, there are exceptions on for companies under 1.5 million in gross receipt, or under 50 million in gross receipt, 1.5 million in QREs, but it doesn't mean that the analysis needs to be weaker for if you have less gross receipts. So this is just some information for you to know, and we will go with the last portion of the incentives that are available for the software industry. One is very much backwards looking, which is the R&D credit. We are sure for sure, that's a funny one, that you will get, some money back if you spent if you have qualified research expenses. The grants is more forward looking. They will look at the agencies like the NSF, National Science Foundation, NIH, depending on the SBIR, SCTR. There's so many different agencies that will look at what you did in the past, and that will basically allocate a portion of their fundings to give you on a period of time to then allow you to extend your runway. It can also give you more time to raise funds from VCs, and essentially allow you to dedicate that money to higher risk, meaning higher rewards projects, which we love doing and hearing about innovation that companies do, to allow them to go the extra mile and spend a bit more money on their innovation, which drives the creation in the right direction, I will say. The details are on the slide. I don't know if you have any questions. Not hesitate to do. The way we go about it is we have two phases. First, we need to talk to you and identify what potential grants could be available to you, which is phase one. Phase two, we do the whole application, the drafting. It's a case-by-case scenario. Sometimes the drafting takes longer than for other companies, but we tailor our analysis to every company. It's not streamlined. It's very much focused on what you do and how we can maximize your chances to, get those fundings in your pocket. And this is a moment for Ty to, talk about Eyelit. I will hand you the mic, Ty, and share that I really love the people that have been here in this office so far, and I'm glad that we can talk about it right now.
For sure. Thank you, TeІva. For all of those who may have joined late, my name is Ty Henderson. I am a senior accountant office manager with Eyelit in this acquired company. I've been with for approximately 13 years. As I stated before, I have tons of experience in different industries as far as accounting is concerned. But one of the best industries that I've worked for and worked in is technology, and that is with Eyelit. And for all of those who may be unfamiliar with Eyelit, Eyelit Technologies is a international software and technology company in which we provide AI-powered software for planning, scheduling, execution in complex manufacturing. We serve a number of different industries such as semiconductor, automotive, medical device, aerospace, and many more different industries. And I would definitely tell you to go and check us out because we may be a suitable fit for you and our software. And speaking of our software is capable of improving factory and multi-factory productivity, asset utilization, and delivery performance, which is great because it allows you to be able to reduce your costs. It gives you faster response, to change and profitable growth. For more information regarding just Eyelit itself as a whole and the products that we serve, I would tell you to definitely go visit our webpage, and that would be available to you if you click on the link through the PDF that you'll receive from the webinar.
Absolutely.
Speaking of Eyelit, Eyelit, like I stated before, is probably one of the best places I've ever worked. And I have to say, the corporate culture here is next to none, right? And I work with a great level of leadership and people, as TeІva stated. It was a pleasure to meet them, and it's a pleasure for me to work with them at all times. So if you get the chance, like I said in the PDF, definitely, we are hiring. Go click on the link and look at some of our opportunities that we have available to you guys. So I appreciate that segue, TeІva, and I'll allow you to continue on.
Thank you. No, very good, very great company to work with, at least in as a discussion with TeІva. We've been working for the past X amount of years, which we have right here, 2021. So it's been what, 4 years now.
Yes.
It's always been a pleasure. And if you're looking for a software-related job, I would definitely look into it.
For sure.
So let's talk about, like how long we've been working together, what this credit allowed you to do, because we've been doing a lot of like explanation, but like concretely, what was your experience? How did you take advantage of this credit? And what was kind of the progression, from starting working in 2021 to moving to starting working together in Canada? Let's go question by question, but like, what's your experience? Like, how was everything?
Well, my personal and professional experience, Leyton is an extremely well-versed company. Their expertise is unmatched, and they have truly been a pleasure to work with. They have given us as an organization a lot of knowledge in how to navigate the complexity of R&D credits, right? We are in a forever changing world. Tax code and tax regulations and laws and legislation is constantly changing. And throughout the years, you have kept us very well informed to be able to make very good decisions. It assists us in forecasting in a lot of ways. It also helps us to retain more money and put more money in our pocket, right?
Very true.
Any other credit that is directly lowering your tax liability, right? So as far as my experience, Leyton has been a true gem and a pleasure to work with, especially you and Andrew throughout the years. And I have to say, it's been one of the highlights of my tenure in my career, working with Leyton and you guys and being able to accommodate a very healthy relationship.
Very true. Thank you. And I'm glad that you also, we'll talk this about the tangible growth, but what Ty just mentioned is that they are forecasting, they're expecting this credit every year at both federal and state level. So you can really put this on your P&L and expect a portion of your research to be refunded and offset some income tax liability. As Ty likes to say, and we discussed this already, cash is the most liquid asset. So
absolutely,
you can really use it the way you want it. And some people like to use it in product development. Some people like to hire more people. Some people like to buy new TVs and have a better workspace. It all comes down to like what your vision is. But if you're comfortable sharing, Ty, and I don't want to get too much into the deep project, but what was what did you use the money for? Very high level wise, because I don't want to get you into trouble with your CFO. And what was I guess that's the question.
Okay, well, as you know, we may have some of our competitors, right? So I'm not going to give too many jewels to our competition, but that is a great question. I will say, not applicable to us in what we particularly use it for. They like to keep some things in-house, right?
Of course. So you have to keep the secret.
But just from an accounting perspective, it does allow for many opportunities, right? For you as an organization, you being able to reduce your debt and your liability in any capacity, retain a little bit more of your cash as opposed to spending it on your tax expenses and things of that sort. It allows you to be able to make an informed decision, right? Whether it's a growth strategy, or
True.
if it's an investment strategy, you can even put it back into your R&D, right? We're
You
speaking
could.
about R&D, right? So you could always put it back into your R&D, which is always an advantage to anyone in the tech field, right?
Mhm.
Being able to grow that product and being able to acquire more customers and advance yourself in a peculiar way.
Very true. And so we ended up working together in Canada as well, because your parent company was located in Canada. So we have offices in Canada, we have offices all around Europe. And it's the beauty of like being kind of in different spaces, you know, you can help out your clients, bring them, and allow them to take advantage of incentives in the United States, in America, in Europe, in Ireland, and planning on opening a new office there. Like, we are here to help you out at different levels, and this was my point. We are going to go very briefly about the step by step. So with Andrew, every time we meet with Ty every year, we identify the project, we identify the cost. We prepare a draft form of the form 6765 that you'll hand to your CPA. We also prep the technical report, that substantiates the claim. And then we provide the unlimited defense that we already talked about, but we are proud to be able to defend our clients as much as needed to talk about the R&D project that we qualified and explain why they are qualified the way they are. Talking about the growth, we kind of shared this already, but I would be curious to know, like, talking about the process, what shocked you or impressed you about the way that we go about the process?
Well, for me, and Ashok as well, it was the level of knowledge that you guys brought to the table, helping us to navigate the complexity, as I said, of the R&D credit. In my nature of business, I like to take complex things and simplify them.
Yeah.
And that was the biggest thing for us, because you guys took a complex situation that was deemed complex and you simplified it, which allowed us to be a lot more productive in other areas, right? So that's an added benefit, being able to put it in trusted hands, which you guys are, and giving us the opportunity to let you guys do the work.
Thank you. Yeah, true. And if you had one advice to give a founder, that is in the same situation, that haven't heard or is already taking care of the credit but might not be maximizing it, what would it be?
Make a wise decision.
Make a wise decision.
Because Leyton has always given us in some way a benefit, right? It's benefited us throughout these years. That's why we've continued to do it. And I think that is the takeaway, that working with Leyton is beneficial to you as an organization. And you don't have to take my word for it. I'm pretty sure if you looked into them, give them a call today, they'll show you exactly how much benefit they could bring to you.
Claim that credit. It's easy. You do R&D, you deserve to be rewarded. A few takeaways before we finish this webinar. So you do need to own the IP on project that you do, but you can also focus on internal projects. You can claim the credit retroactively for the income tax. We need to make sure that the big, beautiful bill that passed on July 4th, 2025, is a hard deadline in 2026. You have 1 year to amend your returns and make the changes to accelerate the amortization of R&D costs that you already had. This is important. The deadline is July 4th, 2026. Book a meeting with us. We need to have a discussion about this sooner than later, because we will need to focus also on your tax deadline, and the payroll credit is only available on original filings, not on amended filing, which means that if you want to take advantage of it, you need to do it before March 15 or April 15. If you want to take advantage of it as soon as possible, we need to do it before the end of each quarter for you to take advantage of it on the following quarter. So book a meeting. If you are a startup, this is important. Let's have a discussion and wrap this up as fast as, not fast as possible, but as soon as possible for you to take advantage of it on the following quarter. The deadlines, as I just mentioned, March 15 for S Corps, and extensions are LLCs as well for September 15. C Corps, April 15, October 15. I'm not learning you guys anything. This will be on the slides. These are all the services that we provide for companies: innovation, grants, energy efficiency, cost segregation, state and local tax, compliance, making sure that we prepare your next exits, make sure you're registered to every single state. We do everything to essentially allow you to like maximize either your exits or maximize your credits, maximize your innovation, help you out at every level that we potentially can. And thank you for joining. As we
Thank you,
said,
guys.
innovation deserves to be rewarded. Book a call. I think Ty very nicely shared his experience with working with us. Thank you so much, Ty, for being transparent and having this
Same here.
discussion.
I truly thank you and appreciate you for the opportunity, TeІva.
Thank you. And I think we are not live anymore. Leave stage.